Alright guys, this is probably one of the most important videos I've ever made on this channel. Those who watch it till the end will probably learn a lot. There's a lot to take away from this. Let's talk about KULR stock, KULR stock. We're going to talk about the weekly, the daily. We're going to talk about patterns. You're going to learn a lot if you're a beginner. You're going to learn why I have a 100% win rate. You're going to learn why I don't work within that traditional framework that has existed for 20 years. And people continue to use it because it's profitable. But they don't think outside that rigid framework. And I do. And I'm about to show you why and why you should wait for KULR to come down to the bottom. Welcome back, ladies and gentlemen, to the Stock Market Show. This is your host, Shades. As always, don't forget to hit that like and subscribe button. In the Discord, one of the guys was asking me, hey, got a question for KULR stock. I'm holding a big bag. What do I do? And I'm like, hey, look, it's up to you. 5:17 a.m. If you're not too deep in the red, but if you are, then you might have to just write it out. I believe it will pump again, but as to when, who knows? I would wait to see if we hold here at $2 at least. Loves to pump from lows, which is why I have been waiting, and will gladly wait months to buy cheap. As you can see, the most recent pump was huge, but most importantly, the stock loves to pump towards end of year and mid-year. Thanks, man. I really appreciate it, and thanks for all you do. I like your style, and your YouTube channel and Discord are top-notch. Seriously, I've seen a lot of different YouTubers, and you are definitely the best. Cheers. So let me hit him with some cheers there. I've gotten a lot of compliments like that. I hate to even be cocky, but most finance YouTubers, influencers, they're very by the books. They trade very by the books, very traditional. And the problem with that is they work within the same framework. Everyone reads the same books. They watch the same YouTubers, and they get this idea of, hey, there's these patterns in the market, which I'm drawing for you right now. And remember what I told you. Everyone sees the pattern. People aren't stupid. If you see the pattern, they see it too. And so what happens is the stock, ever since I said, hey, it's in a pattern, it's going to come down, it did come down. Two days of red. It has to hold here. If it doesn't, we're going back under 2. This is a big area of support. It has to hold 2 or it's over. It's going to dump to like 150. More than likely, that's going to be a psychological support. But everyone sees the pattern. People aren't stupid. They all see it. If you see it, they see it too. And traditional by-the-books traders, they see this and they can play the short side. Or they can wait and see if there's going to be opportunity here at around 180. Because that's a big, let me go to the weekly. It's a big area of support. Right here. That has to hold. In the past, this was a huge support where we bounced off of and had several runs before creating this head and shoulders pattern, which again, it plays out. Why? Psychology. Because everyone sees it and goes, oh, this is going to go lower, and people don't buy, and there's no buyers to be found, so it just, red candle after red candle. This green candle was nothing but a pullback. This is the weekly candle, by the way, and for the dumb one. There's that one dumb subscriber that always says, oh, you said it was going to go down. Yeah, I'm looking at the weekly, dummy, not the daily, let alone the lower time frames. Those can, go somewhere, in a hole somewhere, but yeah. So you see these patterns play out, and it's because traditional by-the-book traders, they trade very rigidly, very within the same framework. And because everyone's working within the same framework that's been established for 20 plus years, the market plays out the way it does, and it has the patterns that it has, right? Does that make sense? Because everyone sees it, everyone knows it, everyone reads the same books, watches the same YouTubers. Whereas I look at that framework and I'm like, okay, this is a framework created 20 plus years ago. It's 2025. Let's look at things differently. There's a reason why I have a 100% win rate since that one penny stock loss. It was a loss from a penny stock, a garbage one at that. And I learned my lesson. I'm like, okay, I'm never trading garbage penny stocks again. Again, only high quality penny stocks like Sybil, and AITX is not high quality, but boy, does it like to hold that bottom, right? I've shown that one before. I think outside the box, outside of that framework, and when you limit yourself to only working outside of that traditional framework, you are forced to think differently, literally think outside the box. I mean, DeepSeek or Deepfake or whatever it's called, DeepSeek. The story with DeepSeek is that, which caused everything to dump. The story with DeepSeek is what? That China doesn't have access to the best chips, right? So they worked within the constraints, within the framework that they can only work within because they don't have a ton of GPUs or whatever, and they created DeepSeek. Actually, them having to work outside of that, outside of having those more powerful chips, made them more creative. And as you saw, it scared everyone, which is why we got a huge sell-off on NVIDIA, and everything else obviously followed. Because when NVIDIA dumps, it usually brings everything down with it, and I think I proved that. Because most people don't believe it till they see it, and you saw it firsthand. I know KULR has nothing to do with NVIDIA, but when NVIDIA's struggling, one of the best stocks out there with the biggest returns since its existence, you think your favorite stock's gonna not struggle? You think it's special that it's not gonna struggle when NVIDIA is? So either way, the point is, if you're holding a bag, if you're not too deep in the red, I'd get out. I'd get out and wait. Patience pays. Patience pays. If you're not too deep in the red, like if you're only down 1%, sure. But if you're down big red, I would just wait at that point. Like I wouldn't sell for a big loss at that point. Just wait. So again, traditional by the books people, they make their money. It's a great framework to work within, absolutely. But it's not 100% win rate. And I want 100% win rate. And I haven't lost since, what was it? February of last year. No, not February of last year. November of last year. Because I decided, you know what? No more trading garbage. And let's be much more disciplined. Much more patient. I've waited a month here. And no crossover. Nothing has happened. So I think the me of last year would have maybe bought here. Like, hey, it's like testing this bottom again. Let's buy again. I would have made money, but no, much more disciplined and patient this time. So hopefully you took something away from this. Like, think outside of that rigid framework. Sure, read those books, watch those YouTubers that teach fundamentals, but just know the big money is made thinking outside that framework, thinking outside that box, because it's going to force you to be creative. Most traders, traditional traders, they're not looking at the weekly and monthly. They're not looking at the weekly and going back in the past and going, let's count candles. Let's see. Like, let me show you some interesting facts here. Ready? Because most traditional traders don't do this. So we had a run here. Okay, the date is down here, okay? May 10th, the start of the run. About a month and a half is what the run lasted. And then it takes about June, July, August. So it takes about 2 to 3 months for it to finally go sideways and kind of do a whole lot of nothing before it gets another big pump. In that big pump, we get 1, 2, 3, 4, 5, 6, like a month and a half of just straight up action before it tops out. And then about, let's see, 1, 2, 3, 4, 1, 2, 3, 4. So like another 3 months of downside before another pump. So what did we just learn looking at this? Loves to bottom out at $2. Has multiple runs here. And it loves to pump for 4 weeks. Sometimes 4 weeks and a half. But the dumps take like 3 months. I want you to think about what I just said. This is some very important analysis that your average finance YouTuber, or probably all of them, don't do. Because again, they're stuck within that rigid framework that I talked about. They just, I don't know. They just can't think outside of that. I don't know. It's 2025. The markets are different from 20 years ago. That framework is fine. It works still, but there's better frameworks. And I have not lost, and I don't think I'm going to lose. And I'm doing a 100% win rate challenge on NVIDIA and uranium, UAC as well. In fact, if it goes down, I will buy more because I have confidence in my outside of the original framework strategies, that's how I'll put it. Okay, so we learned a lot here, right? Like, man, he's right. It pumps like a month and a half, then it dumps, and it takes like 3 months for it to go to the next pump. So that's important information because if we continue here, look, it pumps 1, 2, 3, actually just 3 weeks here of, staying up here at above 2. And then it actually it gets another push here, and then it comes down and bleeds out for months. Let's see, November 21st, and then it gets another big pump by June. So since November, December, January, February, March, April, May, 6 months of just no huge pumps. So after 6 months, we get another 1, 2, 3, 4 weeks of upside here, about 4 weeks. And then we dump again for months. And then, look, 1, 2, 3, 4 weeks of upside. Then we dump again for 3 to 6 months, it seems. It seems to be a pattern. Oh, my God. Do people even look at the weekly chart? I don't think so with with the stupid things some people say. Shades, you said it was going to go down. Yeah, over the course of weeks. I don't even look at the 4 hour or 1 hour. I don't care about those. They don't tell the big story. We look for the big story, my friend. So since April, where did this come down? It started coming down April 15th, and then November 11th. So May, June, July, August, September, October, November. 7 months. So you had to wait 7 months for this to finally get another big pump. This was the biggest pump ever, by the way. So we would expect a much bigger dump. Does that make sense, right? So 1, 2, sideways, 3, 4, 5. So yeah, about a month. Wow, it's almost like it's a pattern, right? A month and a half of upside. Well, we would expect like months of downside, right? I've shown you the pattern. This isn't like bullshit in Minecraft. This isn't BS. I just showed you that. I wonder if traditional by the books traders even do this kind of analysis. Do they actually go into the PRs? Do they actually go to Yahoo Finance and go to KULR stock and look at the PRs and count them? Count the PRs. We were counting candles. Do they actually click on press releases and count every single PR for the past year? Ideally for the past 3 years. The more history, the more data, the better. And then you average out with some math the percentage of PRs that caused the stock to move. And then you look at the date of those stocks that caused the stock to move, and you do some more math, and you figure out like, hey, about every year they have about, 2 to 3 pumps. 6% of PRs move the stock. And here's the best part. I haven't finished my analysis. Let's get a little deeper in here. When did this run happen? Around November, right? Look at that, November 18th, right? Okay, let's go back in the past. Yeah, because these traditional by the book traders, they're never going to be 100% win rate traders because they're still stuck. That framework that was created 20 plus years ago, it's not meant to create traders who achieve 100% win rate. I want you to think about what I just said. And those of you who are experienced in trading, you're probably like, he's not wrong. That makes sense. Yeah, because people don't think outside the box. Okay, so let me show you this, right? Okay, so the first one here, November. Let's see what happened here. Around March. Okay, cool. That's when the run started, around March. All right, so March and November. Oh, let's look here. What happened? June 12. Okay, June, March, and November. Oh, let's see. What's this? Oh, October going into November. Interesting. So far, around October, November, we're getting a pattern here of pumps. What is this? This one started, it bottomed out here. So around January, going into March, we had some upside here. A little bit of upside, not huge pumps, but some upside, right? And that's around January to March. Interesting. So far, around between November and February, it seems like we get plenty of pumps around that time. But we're already past that, right? And look what happened. It topped out in March, and then, it just kept dumping for months and months. Okay, let's look here. October. Ooh, isn't that interesting? October, we had another pump. October 2021. Look at that. It had a pump going into November. Then dumped for months before having another pump in January going into March. So it seems to me there's a pattern here of the stock loving pumps for some, I don't know the reason, but for some reason, and I don't care for the reason, I just see the pattern there. And again, I do the math and I'm like, hey, about, every year there's a 20% chance of this happening on this date, around these dates or around these months, whatever the case may be. And Shades, why are you so confident? I look, I trade like a bot. I don't know. It just there. I do the math and I'm like, okay, this makes sense. I'll just wait for the bottom. I don't know. It pumps and it always takes months to completely come down and find a bottom. I just showed you that. I just showed you also that most of the pumps happen around the end of the year, from like October to January. Well, let me check this one. Okay, so this one was what? October. So this one started in May, going into June. Didn't we have another one like that? This was October. This one was June going into July, and it went sideways in May. So that's interesting, right? So we have two times where the stock between May and June and July had a pump. And then we have a bunch of pumps here, these 5, that happened around that October to February date. Isn't that interesting? So if we do some math real quick, out of what? Let's just say out of, well, there's only been 7 pumps. So out of 10 pumps, let's just round it up. Out of 10 pumps, I'd have to move some numbers. Okay, yeah, out of 10 pumps, let's just say 7 of them happen around that October to January time frame. The other 2 pumps, or the other 3, I should say, happen around, what did we say, mid-June, mid-year? Around mid-year, May to July. So some quick math here, very basic. And I made fun of a guy. I told him, I'm like, how did you get past geometry proofs and not have basic like logic, like reasoning, critical thinking? Like what the? Okay, so if out of 10 pumps, 7 of them happen late in the year, going into the new year, that means there's a 70% chance that every big pump is gonna happen at that time, right? Does that make sense? We're just, again, doing basic math. I'm fudging the numbers, of course, rounding up and all that. And so, I don't know, man. It seems like a pattern. I don't know. Maybe we can abuse that. But in order to abuse it, you have to be patient when it's dumping for months and months. Months and months, months and months, months and months, months and months, months and months. Rinse and repeat, rinse and repeat, rinse and repeat. I don't know if traditional traders see things this way or if they even bother to count PRs and do the math. But I do the math, my friend. And it's basic math. Like, you don't need to learn geometry proofs for this. It's actually completely unnecessary, although having some critical thinking definitely helps. And also recognizing that most people work within the same framework from like 20 plus years ago, which again can be very profitable, but is it 100% profitable? No. You have to think outside the box, my friend. So hopefully a lot of you walked away learning a lot. Like I said, every video I try to make it a lesson. And there's times where I'm going to miss out on plays, but hey, that's okay. I care about the 100% win rate. I don't care if I miss out. Ooh, oh, ho, ho, I'm so scared. Don't care. I trade like a bot. Actually, I think we could break this down even further, right? So now we know, hey, around October to January, there's a 70% chance of a huge pump. Now we know that. Now here's the best part. We're not done yet. Actually, we could take it a step further. How big are the pumps every time we get those big pumps towards the end of the year? So here, okay, this is May. We're not going to count that. So this is around September going into October, going into November. So let's see, it goes from 196 to, oh, look at that, 100% pump. Let's round it up, 100% pump there. This one happened in January to February. So what is that? From a low of 174 to a 260. So what is that? That's like 50%. Yeah, that's not 100% pump, but that's 50%. We're rounding, just to be clear. Again, fudging the numbers here for the sake of easy math. See, you don't even need brilliant math. You can just round numbers. You can just round up. Okay, so from here, what is this? October? Okay, October 10th. From a low of 103 to 218, so that's 100% right there. So we have 200% and 150%. So right now, on average, we got 50 to 100% runs guaranteed every time we get a pump towards the end of the year. This is what, mid-June, so don't care about that. What is this? March, yeah, so March into, okay, April. Yeah, so that one, it's towards the beginning of the year still, the first quarter at least. So I'll count it. Let's see, what, 14 cents to 84. Really? Wow, that thing was low. This one, that was like it was a low of 10 cents and hit a high of 90 cents. So that's a 9x, so a 900% run, which is like different from the norm. because we've only seen 100 and a 50%er. And here we had a huge pump from a low of, what was it, 20 cents to a high of 5.49. So what was that, 20x? That's actually pretty interesting that as we move along here, we started getting bigger pumps now. This was what, 10 cents to 90, so 9x, and this was a 20x. That's interesting. See, this is the kind of data you wouldn't see if you were following a traditional by-the-books trader. They're just going to be like, oh, no, let's just look at the daily or 4-hour. I don't even know what they do. Who knows? Who cares? They're dumb. They're still using the traditional old methods. They haven't adapted. It's 2025. Why are people using a framework from 20 years ago? I don't know. I don't understand. But if you're in the Discord, you've seen already the data. I have a 100% win rate. I'm very confident in my trades. I don't question it because I have a strategy. Because strategy is what gives you confidence. Think about that one for a second. Strategy gives you confidence. Okay, so there you go. About 7 run. Yeah, out of 10 runs, 7 of them happen towards the end of the year, beginning of the year. And they tend to be about 50 to 100% runs. For some reason, they're getting a little more, they're getting bigger. These runs are getting bigger as we move along here. We'll see if the next one's even bigger. But yeah, there you go. Hopefully you learned something. So that's why I haven't bought in. Too many people are like, oh, you're not buying in. Oh, no, stupid. I'm not going to buy in. I'm going to stick to my very untraditional technical analysis. I'm going to stick to my counting candles, PRs, looking at weekly, daily, monthly, and quarterly and yearly, because people don't even look at the quarterly and yearly. I promise you, I shouldn't say I promise you, but at the very least, I can guarantee that if you join the Discord via patreon.com/shadesandtrades, it'll be worth it. Like, I'm getting into calls with people. Like, most Discords don't do that. They just alert. They don't really care. They just want your money. I will actually get in a call with you. This one Polish girl, we got into a call for 5 hours. You know how angry I was? I was like, oh, God, she goes on and on. She kept trying to prove to me that we're not going down. Well, we did go down. And I was right and she was wrong because she's still learning. And unfortunately, she still has the same traditional by-the-books mindset. She's still working within that framework, which I don't blame her. That's all they teach you. No one's going to teach you like the way I see things. You kind of would have to come across someone like me to even learn, right? So it'll be worth it if you join. A lot of people have been joining. They've been saying like, man, I got to change my mindset. I got to think differently. Like, this is like the way you teach is very different. Now, even this morning, this guy was speculating on the Trump tariffs and China tariffs and, the Fed speaking today. And I'm like, I don't care to speculate. Waste of time to speculate. We react to the price action. That's it. And that's what I just showed you. I react to the price action. Price action is telling me we got plenty of pumps towards the end of the year. And they tend to be 50 to 100%, and they're getting a lot bigger for some reason as we go along. And when it dumps, it takes months to really bottom out. Like, we just care about the price action and reacting. NVIDIA was a perfect example of that. People reacted foolishly, and we reacted too by buying LOL. I don't care what they say or do. Just care about market direction after the fact, basically. If we dump, great, I'll buy cheapies. If we pump, great, I'll buy more. I'm a bot, guys. Bots don't care. In fact, the market algorithm will move us up or down or fake us out one way or the other. Who knows? Who cares? I wasn't kidding about just sitting back and watching. The most money made is just sitting back and watching. What do you think I've been doing this whole time I've been talking about color? And I'm not mad. I'm just like really passionate, I guess, is what people have said. And I want people to learn and be good at this. Using non-traditional analysis, going outside the box. Because most people don't do this. That's why a lot of you have told me, like, yeah, you're different from those other finance channels. And I'm like, yeah, because I looked at those other finance channels. I've used to be a beginner. I've seen what's out there. And I looked at that and I'm like, let's create a whole new framework. But the problem with creating a whole new framework is you have to reinvent the wheel. And that's very time consuming. But it is possible. But most people are lazy. They don't want to reinvent the wheel. They see the traditional, analysis and they stick to it. That's why you see these patterns play out in the markets. Again, you do you. I know most of you are more traditional by the books and you're going to stick to it and that's fine. But you'll never achieve 100% win rate. And I'm proving it this year. I am being so cocky, but you just wait till the end of the year. I'm going to show the results and you guys are going to be like, how? How is this possible? And I'm going to be like, don't trade like a traditional trader. I don't know if I can find it. I put pictures of popcorn. I bought a bunch of popcorn for today. When Powell speaks, I'll just be eating AMC popcorn and all those other popcorns. But yeah, it's a good time. It's a good time when you have a different framework to work with. And I know some of what everything I just said to you might have just gone over your head, especially if you're a beginner. But at the end of the day, the fact that you're watching my channel probably puts you above most people in terms of intelligence, because especially if you recognize the value. But yeah, here's the update from yesterday. Man, I can wait for 0026. If it doesn't come down to where I want to buy, then oh well, I'll buy more stag. Bought one Nvidia share here for the 100% win rate challenge, because that's all I can afford. It's a small account. It sucks. I can only buy one Nvidia share. When it dumped, I was like, okay, whatever. The goal is 100% win rate, not maximum gains. So, you know, I showed everyone the order. Yeah, small accounts suck. I'm glad I'm not a real small account. Yeah, so the small account challenge, as you can see, the reporting period, and yeah. So $65, 100% win rate. You can see stag, Nvidia. The account is growing slowly, but the point is, again, the point is not really to grow the account. It's more so achieving the 100% win rate. Because at that point, if you can prove 100% win rate, think about what I'm about to say, you've proven that you're a money printer. You've proven that you can win all the time. In fact, if we go into a bear market, it kind of sucks with a small account because I can only average down like one share at a time. Like I can only buy one share at 100 and then one share at $75. Like the lower it goes, the more it sucks for people with not much money, because you just can't really make the most of it. Like turning 1,000 into 2,000 from bear market to bull market, that's cool, but if you have more, you can make a lot more. You know what I'm saying? So doing this small account 100% win rate challenge kind of sucks, because it makes me realize like, oh God, it must be so painful to be like small. But the fact that you can prove 100% win rate just trading like a few stocks, you're a money printer. And most people can't do this because they trade by that traditional framework. And most people there's gonna be people who root against me because they don't want to see like someone that is successful and that achieves 100% win rate, because that's just insanity to them. In their head, they could never fathom that, because those traditional by the books, that framework, it teaches you to take losses, and I'm like, that's stupid, and I'm gonna prove it, and that's what I'm here for. And I hope a lot of you learned a lot from watching this video. Those who watch to the end are probably going to learn the most, because you get to see I laid it all out there. Like, you can take what I just did and everything I just showed you, and you can reverse engineer it if you're smart enough, I guess. I don't know. It's not a genius thing to do to reverse engineer things. Like, it's not. I even made a video on Patreon, how to reverse engineer strategies. Like, I'm very open book. So unless you're somehow dumb as a rock, you should be able to reverse engineer everything I just showed you today. Anyways, I hope you learned a lot. Like, you're meeting me in my prime, and I was not kidding. You know, just shut up and buy. And that's it for the video. Pretty long one.